What's up, everyone? All right, so here we are, Friday the 13th. At least for me, it's my 13th consecutive green day. It's Friday, last day of the week, last day of the month, up $2,500. Feeling good about that. So this has been a nice little hot streak here. I've got my calendar. I don't remember, I'm not really sure this year what my longest hot streak has been, but this has been a pretty nice one. Just about $62,000 of profit in the last 13 days. So green is good, and it's going to carry this momentum into December. You know, that's what I'm really hoping for. Strong December, strong January, the three strongest months of the year for me. So $60,000, 62. It's a little less than the $81,000 I made in November of 2017, but still, this is my third best month of the year. I can feel good about that, I really can. So I'm happy there with my gains, and we're back at it first thing on Monday morning, looking to continue this momentum that we are definitely seeing in the small cap market. So reminder, Monday, 7 p.m. Eastern, I'm hosting a free workshop. I'm going to be talking about my strategy, how I find stocks to trade, how I manage my risk on them, and where I get in, where I get out. Today on ADIL, best entry, $3.82. Best exit, $4.63. It hit a high of $5. So, you know, I'm going to show you how that's done. All right, so make sure you register. I'm going to put the link below in the YouTube description so you guys can click register, and I will see you there Monday at 7 p.m. And of course, I'll see you back at it first thing Monday morning, 9:15 for our pre-market analysis. Any questions, any comments on the trades from today, leave them below. I'll come back through and answer them, and I'll see you guys on Monday. All right, see you later. All right, everyone. So we're going to do our midday market recap. Guess what? We made it through November. It is the end of the month. And today, for me, is Friday the 13th because it is my 13th consecutive green day. And of course, it is Friday. So I am very happy with that. It's been a while since I had a 13-day hot streak. I don't really remember how long my last consecutive hot streak was, consecutive days, but it's not something I really focus on all that much. In 2016, going into 2017, I had I want to say a 56-day hot streak, and by hot streak I mean 56 days in a row where I was green every single day. The problem was that I was, I was getting a little just fixated on having as many green days in a row to the point where if I had a day where I was up even just like $100, I would stop trading because I'd rather be up 100 than risk going red, even if there was a chance to maybe make another $200, $300, or $500. So during that hot streak, I actually didn't make nearly as much money as I've made on other hot streaks where I happen to have a couple of red days sprinkled in. So kind of interesting there. I can actually show you in Trader View in a minute that hot streak. But, so in any case, having a hot streak does not mean not having losers. And it's important not to get too bent out of shape or too fixated on having consecutive green days, because the reality is having red days is not a big deal. I lose 30% of the time. My statistics are, pretty solid that I'm right 70% and I'm wrong 30% of the time. So I have a lot of losses, but it's really not a big deal. So I'll switch into the screen share here so you guys can see my P&L. Finishing the morning up $2,558.07. Not bad at all. It's very solid. Now, when I look at this hot streak, I want to say this was started in November of 2016, and it went until like January 31st of 2017. Let's see if we can filter that time frame, and we'll look at 90 days. This might not have been it. No, maybe this was. Actually, that's a pretty long hot streak, but it wasn't. Let's see, 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 23. No, it wasn't that one. Maybe I'm thinking of 2015 going into 2016. am definitely not thinking about 2017 going into 18. So in any case, it just goes to show that, just because you have a bunch of consecutive green days, you're not necessarily going to make as much as someone who's, trading aggressively and isn't afraid to have a red day, because there's nothing wrong with having a red day. I have 2 red days here for the month of November. I lost $3,200 on Friday the 2nd, and I lost $3,400 on Thursday the 8th. And that was my last red day. I didn't take any trades on Friday the 9th, and then it's been all green since then. So I'm gonna write it in my calendar here. 13th consecutive green day, plus $2,558.07. It is the 219th trading day of the year for me. So 219 looks like we've got, let's see, 5, 10, 15, 16, 17, 18 more days in the year if I don't trade on Christmas Eve. I don't know that I will, because Christmas Day is on Tuesday. So about 18 more days in the year. So we'll finish this year with, what is that? 238 trading days, 237 trading days. For me, I've taken a couple days off here and there. There's probably about 250 trading days in the year. So high level of where I'm at on the month. I'll wait until I get my broker statements. Of course, I'll upload those to the website early next week, but I'm showing myself right around $62,000 on the month. Once I get my statement, I'll be able to dial that into the penny, but about $62,000 on the month puts me up just under $480,000 on the year, which is great, and sitting at $815,000 in the account that I started 2 years ago in January with less than $600 bucks. So $184,000 between me and the $1 million finish line for that $1 million challenge. So getting closer and closer, but at the same time, just like you're in the Tour de France or whatever you want to think of it as, you still have a couple more stages to go. I'm 81% of the way there. I still have a good leg, to get through, and I got to stay focused. I want to finish this strong. If I wipe out, if I have a big screw up, it's going to set me back. It's going to hurt. So this is the time definitely not to get sloppy and just coast, but to stay focused, to stay engaged, to be aggressive, and to be aggressive at the right times. So this has been a pretty great year, no doubt. I did have a red month in February, and I was break even basically in August, but September was better. October was great, and here November is pretty darn good as well. So looking at the P&L, only took trades on one stock today, ADIL IRA account, no trades in it today. Only have $5,000 in buying power. That's because I took some trades in it yesterday, or was it yesterday or the day before? I can't remember. But anyways, not enough buying power to take any trades. So this account will just sit here until Monday when my buying power is restored back up towards 23,000. And then I can take a couple more trades. Trying to get this, above $25,000, the PDT rule, as quick as I can. But, being green is important. So this account is going to be up, I want to say about $3,000 or $4,000 this month, which is about 20%. So that's solid. But no trades in that one today. So I'm going to close down that account. I'm not going to save my changes. All right. So ADIL, this one was on our watch list. Remember, every single morning, it's the same routine. I know it sounds at some points like a broken record, but it's just the same routine every day. It's just like going out and starting your car and driving to work. It's just every day is the same. It's the same process. The stimuli, is different in the sense that there's different market conditions, there's different stocks on the scanners, there's different things you're looking at, but the routine's the same. So leading gapper TIK. TIK gapping up 112%. And you'll see it's a red day today. Let's pull back this daily chart just a smidge. And what you're going to see is that this stock has a history of putting in red days like this. This was a big warning sign that there was a high likelihood that it was going to give you this this big ugly move. So no trades on it. Was watching it out of the gates for a possible break of pre-market highs of 520. Actually, we got up to a high of 530, and it did break that level. It squeezed up to a high of 570, so it actually gave you a 40-cent gap and go trade, which is not bad. You know, it really wasn't bad, but you know, it popped up to 570, dropped back down to 450, squeezed back up to 555, and then is now at basically low of day. So no trades on it. You know, stayed conservative, just saying, you know what, I'm too worried that this is going to do a false breakout, so I'm going to leave it alone. So good job there on my part, just steering clear of that high risk trade. That was our leading gapper. Second leading gapper, ADIL. This is the one that I traded. All right, gapping up 28%, priced at $3.60 with a 3.8 million share float. I go through my checklist, my 5-point checklist of the criteria for home run potential. Now, coming up on Monday night at 7 p.m., I'm going to host a workshop, and I would love to have you guys register. Those of you watching on Facebook Live, the link to register is just below in the description. Those of you watching on YouTube, the link will also be in the description. And those of you guys here on in chat, I'm going to give you the link as well. So let's see, copy, delete, and I'm going to post it in the announcements tab. So as many of you guys know, let's see, I hosted a workshop just about 2 weeks ago. We had a great turnout. We had, in fact, so many people register that not everyone was able to get into the live event, and some were in listen-only mode, so we weren't able to ask questions and stuff like that. So what we'll do is we'll hang out for probably 2.5, 3 hours. I'm going to walk you through my 5 criteria for a stock with home run potential. I'm going to talk about how I manage my risk on those trades, where I get in and where I get out, and I'll do some Q&A. So I'd love to have you guys register, those of you who haven't attended one of my workshops before. That will be a lot of fun. All right, so let's see. Let me just, oh, okay, I see what's going on. Hang on, let me just send a quick message to my support team. All right, so anyways, yes, that's coming up on Monday night, 7 p.m. Eastern. Now, ADIL met all my criteria for a stock in play. So you can see the price is 360, gap is 28%, 3.8 million share float, 210,000 shares of volume. I pull up the stock here pre-market, and I can see that there's a headline. And of course, it had a big move yesterday, and we had traded it yesterday. All-time highs on it were actually yesterday's high of, all-time highs were 440, and yesterday's high was 426. So I was watching it for a break of yesterday's high and then a test of 440. Pre-market, it has a little pullback right here, as you can see, with a high of 367. And as it starts to surge up, I buy it for a gap and go trade. I actually got in it a little late. It already started to squeeze without me, and I jumped on the momentum. The train was already leaving the station, but it hadn't picked up too much speed yet, so I was able to jump in. Jumped in at 382, 82, and 99. 9,000 shares. Now it popped up to 4, and then it didn't seem like it was going to break 4, so I started unwinding the position at 95, 99, and 96, and then I added back at 95 and $4. And this sometimes happens where, you know, my bias will change so quickly from wanting to be long to wanting to unwind the position. So I got back in at 4, but then it broke 4 and dropped back down. So I had to sell those shares at 99. And then it got up to a high of 412 or so. It moves a little higher. As you can see here, it kind of popped to 417, then dropped back down to a low of 378, and then curls back up again. So a little choppy. Note on the 1-minute chart how you have big green volume on the green candles, smaller volume on the red candles. That's very bullish. So it ends up squeezing up to a high of 480. My best entry was 382. My best exit was right around 463. There's an exit at 463. So I didn't capture high a day, but you know, I made enough to walk away with $2,500, and that's always you know, the challenge. Can you walk away green on the day? And today I'm doing it. I set a conservative goal of just $500, and I was able to beat that times 5. So you know, that's good. But really, this morning I just wanted to be green. Wore my red shirt, my lucky red shirt. Now it's a lucky shirt, and ended up getting a couple of good opportunities. But definitely one of the things, you know, with trading is just the fact that sometimes you'll sit down looking for stocks to trade, and despite all of your best intentions, there is just simply nothing moving. There aren't any opportunities. And so on days when that happens, you know, you're going to just end up being break even, you know, or you won't take any trades, or if you force it, you're going to end up losing money. And that's obviously not something you want to do. So today we were fortunate in the fact that we had a really good small cap making some big moves from 350 up to just under $5. It's still up 68% on the day, and we had this on watch from 360. So it's still up $1 per share just about from my first entry. So really solid. I love seeing that. Great momentum, and this is a good way to finish the month of November. It really has been the last 3 weeks have been just terrific. We've been seeing terrific momentum, great opportunities, both long and short. You know, not to say that short sellers haven't been doing well, because I'm sure they have. Volatility has been good for everyone. And so, you know, we're all making some money going into the, you know, kind of the end of the year, which is, you know, definitely nice. TIK, couple opportunities to the long side, some good opportunities to the short side. So that's good for short sellers. Let's see, OGen, you know, not super volatile. I mean, a little bit of a whip around there, you know, but overall seeing some good opportunities. So anyways, it's certainly nice to see that. So I'm going to finish up the month here with about $62,000 in profit. Haven't taken any of the money out of my account in a while, but my largest position today would have been about 9,000 shares on ADIL at $4. So, you know, less than $40,000 on my biggest position. I certainly would have been able to take this even if I had only $25,000 in my account, because I would have used my buying power for this trade, my margin. So, you know, I've got a little extra capital in the account, kind of letting it build up there, and I'll probably take it out closer to, you know, Christmas time or something like that. I usually take profits out, kind of reinvest in the overall market long term. I just, you know, retirement type of stuff, just putting it away. I don't actively trade my long-term account. I just feel like that's too much pressure for me. I focus on the day trades and then put the money away and just let it work. So yeah, this year hasn't been the most impressive. I mean, right now versus January, where let's see, January was right here. We're up, you know, moderately on the S&P, but for, you know, a couple days there, we were all the way back to break even. One of the things I do like are dividend paying stocks, so at least I can get the dividend and reinvest it. Remember during, well, not that many of you would remember this, but we've talked about this in class. During the Great Depression, there were a lot of people that they had put a lot of money into the stock market. And so if we even just go back to, you know, the recession, the Great Recession of 2008, people that were in the stock market through this period, you know, say they bought into some dividend paying stocks, you know, in this stretch here in the 2000s as the market was recovering. So, you know, right here, they're down significantly. I mean, some of them are down 50%, but they're still collecting their dividend. And so the good news there for, you know, those holding those stocks is that they can still collect that dividend check, and they can still, you know, make a little bit of residual income they can make residual income without selling any of the shares, because the only way to take profit out of the market is either to sell the shares you have or to choose not to reinvest the dividends. Now, I personally reinvest the dividends. So, you know, if you just always reinvest the dividends, eventually you'll just have more shares of that stock. But For those living through the Great Depression, instead of selling their shares, some of them which were worth very, very little versus what they bought them for, they just held on to them. They lived off their dividend. And then on the other side, the value of the stock went back up. For active traders, there's also the opportunity to be selling covered calls against an open position. And by doing that, you're reducing your cost basis. You've got to be pretty diligent about watching the stocks every day. And it's not something that is, set it and forget it. You've got to be actively watching it, but, it is an opportunity to take a little bit more of an active role in managing long-term stuff. I personally don't do that right now. I've got too many other things to focus on. So, but in any case, I haven't been super inclined to throw a lot more money into the market right now, just because, look at where we've come in the last 10 years. I mean, I do feel like we're due for a pullback. We got one in 2016, a little bit here, as those of you guys will remember who were trading through that period. And then off that level, we've had a couple of really strong years. If you're still watching, you must have really enjoyed that video. So why not subscribe and get email alerts anytime I upload new content? Remember, when you subscribe, you become a member of the Warrior Trading family.